This is a video tutorial about contracts specifically. I've already done some other tutorials on templates, but this is a client's SkySlope folder that I just created a couple days ago. This is the order that my forms are in. Good thing to, pause and try to copy the order. So typically before I meet with them, I have these first 6 electronically signed as far as seller's disclosure notice, as well as providing some value as far as general notice to buyers and sellers, also information for brokerage services, wire fraud notice, things like that. But this video is specifically to go over the 1 to 4 family contract in more detail, so that way you are aware of some of the specifics about our contracts. The first paragraph is going to be the seller's name and your buyer's name. Buyer's name is typically pulled off of their pre-approval letter, so that way you can make sure to include if they have a middle initial, something like that, and then it's spelled correctly. And then the seller's information, I either will pull from a couple different things. The first place I will look when I am pulling up taxes, or pulling up sellers' names, is to look what it lists on the MLS. But I will also verify by clicking the TX button here on a listing. This is the taxes. That links to realist tax. So this is where I would be able to see also information here and verify the names. So for example, this has 2 names on it, so I'd be listing both of those names as sellers. Another thing I will do to double check that the names are correct is I will go under the transaction desk, and I will pull up the seller's disclosure, and I will verify who signed the seller's disclosure notice. So that's another way to verify who is the seller according to the listing. I would be looking to see who signed the documents. So they should have a seller signature there, for example. So once I filled those information out, you'll notice that when you click on it, it will hyperlink here. So you put in the person's email address and phone number. So whenever it goes to electronic signature, it's sending to that. And then you are going to manually type in lot block and addition. So once again, I'm pulling up the MLS to see it listed here, but I'm also verifying on that tax report to also double check that that is correct. So here you can see lot and block, and then also subdivision name here. You want to also make sure that the city, the zip code, all of that is correct. So I will pull that in. Also, just a cool little note, sometimes you'll notice a discrepancy between what city is listed on the listing, but the good way to double check what city something is in is go under this jurisdiction for taxes. This is in the city of Reno because it has a tax entity. If there's no city of on their tax entities, then they're actually not in the city limits. You'll see a city listed. So for example, I live outside of the city limits. You'd still put Fort Worth, but there's nothing listed as far as for the city, which means they're outside city limits because they're not paying taxes to a city. So we'd be filling this information out. That's all coming through the tax report as far as the lot, the block, the subdivision, the city name, which will match to who they're paying taxes to, and then the county and address. Exclusions, you will fill out from the listing. If they had anything listed under this exclusions part on the listing, then you would want to talk to your seller or your buyer about it and make sure they understood what stuff is supposed to stay with the home and what is not. So accessories and improvements are things that the state says should stay with a home. Common things, the mounts for the TVs, the kitchen appliances. Big note, a fridge is not a kitchen appliance, so it doesn't keep the fridge, but the dishwasher, oven, microwave if they're attached. And then blinds and curtains, security cameras. So it lists examples of all the things that would be staying with the house unless they're listed in the exclusions. Paragraph 3, you would put their down payment amount, which should be matching their pre-approval letter, and then their financing amount, and then it will auto sum the sales price based on that. You want to make sure if it is finance that you have that checked. If it is an all cash transaction, then that would not be checked. You would just have the cash portion. And then I sometimes see people mix these up and put down payment or the loan amount on the top and then down payment on the bottom. So just make sure that those are in the correct order. We don't deal with seller financing very often or loan assumptions, but we do have special forms for those. The next paragraph is about leases. Honestly, the vast majority of the time, this is not filled out, mainly because there aren't necessarily those applicable types of leases. If there is, then the seller is supposed to, or the listing agent is supposed to have it disclosed. If there is like a mineral lease or a solar lease, something like that, they're supposed to notify you and it would be in the listing. On to page 2. This top part will autofill once you have the address completed up in paragraph 2. It will automatically fill that out for you. This is where you put the title company. You'll also put the title company in this paragraph as well. You would find that from the listing. You'll see if a seller or a listing agent has a preferred title company. So you would typically oblige them and put the title company that they have requested. If there is nothing filled out, then you can choose. Technically, it is negotiable, but customarily in our market, if the listing agent requests a title company, that's normally who we'll put it with. So that's who you would list here, and then you would list the information there as far as location over in this paragraph. Earnest money and option money are negotiable. That's why they're blank. 1% is customary for the earnest money amount. So if the sales price ends up being $350,000, then this would likely be $3,500. And then option fee is customarily a couple $100s. Depends on the client. I will normally make a recommendation, but a lot of times we'll see between $1 and $250. So 100 or say 150. Now, as it's stated here, both the earnest and the option money are made payable to the title company, the escrow agent, not to the specific agent, but to the title company. And then they are paid either separately or combined. And that money is due within 3 days of the effective date. So if you go under contract at any time on a Monday, between, even if it's 7 in the morning or if it's 11 p.m., that is your execution date would be that Monday, making Tuesday day 1. So Tuesday, Wednesday, Thursday, it would be due by end of business on Thursday. Now it is that it needs to be received, not sent. So that is very important to make sure your clients understand they can't send the wire on Thursday. It needs to already have arrived to the title company and receipted by the end of business Thursday. So my rule of thumb and recommendation, basically you let the clients know as soon as you are under contract, here's where the money needs to go. Make sure to get it there quickly. That can be either delivering a personal check, that can be doing a wire transfer, or that could be doing what's called ZOCAM, ZOCAAM, and ZOCAM is like like a phone app deposit. A lot of title companies use ZOCAM now, and it's very convenient, and so normally we'll use ZOCAM. Those two things are paid together. So in this case, it would be $36.50 is what they're paying. And then here, the termination option inspection period is how long you'd put in for your inspection window. Customarily, 7 days is pretty common. So if you go under contract, like I said, anytime on that Monday, Tuesday is day 1. So I'm counting on my fingers here. Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, Monday. So Monday at 5 p.m. is the end of that inspection window. So because of that example, I would want to have my repairs submitted to the listing agent or my repair amendments provided by Friday, ideally. So that way it gives you a few days to negotiate. So if we went under contract on Monday, I'd be encouraging my clients to get that inspection scheduled ASAP. I would want their inspection to be done on Tuesday or Wednesday. That way we have enough time to review it, or if we end up needing to have a roofing specialist or a foundation specialist, we have enough time to get them over there to check it out. This right here is something we don't see very often used. I have 0 and 0 as part of my template. So that way I don't like blanks. I want things filled out always, just for my own personal comfort. I don't like having blanks in a contract. I'd rather it say none or zero rather than be just omitted. But this is specifically if there was going to be additional earnest money deposited. I don't see this happen very often. When I do, it tends to be because there's some type of liquidity issue with the earnest money, and we would do, say, $1,000 initially, and then the additional amount to equal 1% within a certain number of days. Like I said, it doesn't come up very often, but that's what that means specifically. Another thing to point out, and it's really pretty clear here, we used to have a lot more issues with option fee because technically it used to be delivered to a seller, not to the title company. And so we would run into some issues with that. But you can see it says if the last day of the delivery for earnest and option or additional earnest money falls on a Saturday or Sunday or legal holiday, the time to deliver the earnest money, option money, or additional earnest money, if applicable, is extended until the end of the next business day. That is not a Saturday, Sunday, or legal holiday. So what that means is if you go under contract on, say, Wednesday. So if you go under contract at any time on Wednesday, Thursday is day 1, Friday is day 2, Saturday is day 3. Well, Saturday is not, they're not open. Title company is not open. So you would have, assuming that Monday is not a holiday, you would actually have until Monday, end of business, in order to get it there. Now, with that also being said, if Friday was the day you executed the contract, it is not that the days don't count. It just rolls into the next available day. So if you go under contract on Friday, then it's Saturday's day 1, Sunday's day 2, Monday's day 3. So you'd still, if you go under contract on Friday, you still have to have it there by Monday, end of business. Unless it's a legal holiday, then it would go till Tuesday, end of business. So we used to have where the option fee did not have that protection to roll for a legal holiday or a weekend. And so we would sometimes have issues where you're delivering earnest money to the title company with those extra protections and the option fee didn't. And I once had option fee actually needing to be delivered on Christmas Day. So that's what's kind of changed as far as the new rules that we changed a couple years ago. Also, since the amount received shall be applied first to the option fee, then to the earnest money, and then additional. What that means is basically if there wasn't enough, say it was only a $3,500 and not the $150 on top of that, not $2,650, then the $150 is the first part and you're short $150 on your option fee because the seller has the right to receive that earnest money or the option money if the buyer terminates. Once again, it says also here, buyer authorizes the escrow agent to release and deliver option money to the seller at any time given without further notice. And basically, customarily, the option fee is held at the title company all the way up until closing. And then right here, it is credited towards the sales price at closing. If the buyer backs out for any reason at any time, or the seller just wants the option fee, it can be released to the seller, but it's still credited back to the buyer when they close. Next is that option period. Termination option inspection period is what, really the full name is. We'll hear people call it an inspection period often. Technically, that's not its real name, but it is saying that you have this number of days to have the unrestricted right to terminate the contract with given notice to terminate. Basically, this starts the day after the signed contract, just like we talked about. So if you went under contract on Monday, you have through the following Monday at 5 p.m. Central Time. Once again, back in my day, in the beginning of my career, it was a midnight cutoff. And so sometimes we would be negotiating repairs up until almost midnight. Personally, I'm not a huge fan of the 5 p.m. cutoff just because some people's jobs are not nearly as flexible and it's hard for them to sign things in time or communicate with us. So I kind of wish it was like 7 or 8 p.m., but they didn't ask my opinion. But it says that the buyer may give notice of termination within the time prescribed. And if that happens, the option money will not be refunded, and the escrow officer will release that the option money to the seller, and then the earnest money will be refunded to the buyer. Big thing too, if money is not received within that time allotted, so if the option fee is, say, wired on that third day but not received by the title company on that third day, you technically don't have the unrestricted right to terminate per the option period. So that's why it's so important to make sure that that money is there in a timely manner. Also, time is of the essence. It is not make the request by the end of that period. It is come to a written agreement by that time. So that's another big thing to understand, which is why we want to give it a little bit of headway, a couple days when you make a repair request, so it gives enough time for the seller to respond to your request. The next thing is about the title policy and survey. So this is where we write in who will be responsible for paying for the owner's title policy, and then the title company would be written in here. If you check both boxes, you are saying we will split the cost. If you have just one box, then that is the person assuming the full cost of that title policy, which is issued by the title company. If you don't have a box checked, that's bad news bears because you've done your job wrong. That can be a multiple thousands of dollars mistake if you do not have something checked. So on my personal template, it is already checked as seller. So that way, if something is different, I can uncheck it, but 99% of the time it's a seller expense in my offers. So I have it pre-checked to make sure we never have an issue where that is not a checked box. I have received offers in the past where the other agent omitted checking that box. The cost of that title policy is regulated by the State Department of Insurance directly based on the sales price. So it can be a huge, huge expense. I just pulled up real quick. This is the estimates here for the owner's title policy. As you can see, like an example of a $445,000 house, the policy is $2,650. You increase the sales price, and you can obviously see how much it can go up. But we're talking just on a standard home over $2,000 for that title policy. There's also a thing called a shortage of area policy, which is optional. That is 5% of the premium, so it's a few $100s depending on the sales price. Personally, I don't bother with shortage of area policies on a lot and block home, meaning in a neighborhood with typical boundary lines, because they have pins in the ground. It's very easy for them to identify property boundaries. Shortages of area would be an issue where it is meets and bounds. It's the lot is not easily defined, and it is like start at the oak tree and go 156 paces northwest kind of thing, where there can be shortages in what they've estimated the lot to be versus in a lot and block situation, a normal neighborhood. It's really not that necessary because it's clearly defined, and hard to need to use a policy like that because they know exactly where the property boundaries are. It also specifies about receiving the title commitment and the obligations for the title company. They have to provide things like deed restrictions, plots. They make sure that there's no liens that are not being paid off as part of the transaction. They make sure that they're getting the correct sellers to sign off. And that title policy is issued to ensure clear title from the day of closing and before. So if anybody showed up and said the previous owner was my grandma and I have ownership, or I worked on this house and never got paid, all of that is being protected through the title policy. So if something like that happened after a buyer moved in, they would contact the title company and make a title claim. So that is the first 2 pages of our 1-to-4 family contract.